Hey there. So during this video, this is the first video where we're going to start looking at how we find our value drivers. And everything that is on this sheet, right, everything that you have on your income statement and balance sheet, it may be different than the things that I have on mine, but that's just the nature of having different companies with different financial statements. Every one of these things has to be forecasted. But not all of it gets forecasted with a driver. Some of it is just a subtotal, right? Net income, for instance, won't get a driver. Net income is going to be equal to sales, right, minus direct costs, minus depreciation, amortization, minus selling, general, and administrative, right? So you'll forecast a bunch of line items. Those will get drivers, but anything that's a subtotal won't get a driver. So for instance, I've got sales revenue, it's going to get a driver. But total revenue is just going to be equal to the sum total of all of my revenue streams. Since I only have one revenue stream, that's going to be easy. It's always going to equal sales. So it doesn't need its own driver. I'm going to gray it out, right? It doesn't get a driver. Direct cost gets a driver. Depreciation gets a driver. Gross profit. Gross profit is equal to total revenue minus direct costs minus depreciation and amortization. So gross profit, I'm not going to give a driver to. I'm going to calculate it when I do my forecasting. If you move through, you'll look at your list for anything that is a subtotal. Total indirect operating costs, well, that's going to be equal to selling, general, and administrative plus restructuring, remediation, and impairment. Doesn't get a driver. Operating income, that's the total of gross profit minus total indirect operating costs. Doesn't get a driver. Interest expense, both of these do, but total non-operating income does not, right? Because it's a subtotal. Earnings before tax is a subtotal. Taxation gets a driver, right? Our income tax rate, you already calculated that as part of WAC. Net income doesn't get a driver. So on the income statement, the neat thing is that we really only need to find 1, 2, 3, 4, 5, 6, 7, 8, 9, but you already found it, drivers, right? You may have more or less, but you won't have 20, right? Anything that's a subtotal doesn't get a driver. The same thing happens on the balance sheet. Cash and equivalents, you might have short-term investments. If so, your cash equivalents and short-term investment will be the total of those two added together. Total current assets is where you add up the total of all of your current assets except for cash, right? As you'll read in Chapter 7, we keep cash and short-term investments separate because we separate operating current assets from financial current assets. So that's going to be a subtotal. We will not need one for total assets. We will not need one for total current liabilities. We won't need one for total liabilities. We're not going to need one for total equity or total liabilities and equity, right? Those don't get drivers because we will forecast them by adding together other items that we've found with a driver. All right, I hope I didn't miss anything, but you guys have taken accounting, so if you run into something that's a subtotal, even if I've missed it here, you'll be able to identify it. If it's the sum of other things added together, it's either a subtotal or a total. It doesn't get a value driver.